Hi, and welcome back. You're watching the Short Vol Show, and my name is David Lincoln. We were talking more about calendar spreads. There was some guys on Facebook having a discussion about it, and I found another one that might be of interest. So if we were to go back to barchart.com and go to highest implied volatility, you'll see one on here. Now, this is another one that's kind of problematic because it's only a $12 stock, which I don't really like, but it's ADVM. I mean, my feeling is that if you can get these things if there's relatively easy way to leg into these things for nothing, then it's totally worth it. But take a look at this one. Stock went out 12.12, and the thing is the markets and the options aren't going to be great here because you can see it's pegged to the bid offer after the close, which is $10 bid at 13. So it's real wide, but front month here is showing 300 and let me move this over so you can see it better. Front month is showing 317 vol, second month 192 vol, third month 164 vol. So essentially the markets in September and October are very similar, right, for these options. The October 15s went out $1.88, and the Sep 15s went out $1.84. So that's 4 cents difference between the two markets. So that's real tight, right? And we got to figure out what is going on in this stock. There's obviously something coming up that's going to move it. Let's go to the news stories just in Thinkorswim, see if there's anything there. It's called Adverum Biotechnologies, and surprise, surprise, another biotech stock. And let's see what it says here. Okay, Adverum Technologies. Adverum Biotechnologies is due on Thursday to release 24-week data from the first cohort of a phase 1 study evaluating its ADVM22 in wet age-related macular degeneration. So they're coming out with something on Thursday, and this one just very similar to the one we were talking about before, that AIMT has only monthly expirations, and it has something coming out this week, whereas SEP ends the week after. So September options end on the 20th of September in this one, and the event is this Thursday. Now, AIMT, if you recall, the event is this Friday. So you've got AUK options exactly the same as SEP options. And if we look to where it shows the volatility there, where it shows that it's expecting a $6 move. A $6 move. And it's strange because, like I said, the options are almost exactly the same as October, but October says a $7 move. So 6.4 versus 7.1. So there might be something slightly funky about the calculation of the move for those. Excuse me. But let's take a look at this one. And what I'm going to do during the week is see how this stuff is trading and if it's possible to leg into some stuff. By stuff, meaning buying the October and selling the September for a price that is like 5 cents for the whole thing. So let's see, the biggest trades here were SEP 15 puts. Someone bought 3,000 of them on Friday. So SEP 15 puts. So the people that are taking the real risk are the ones that are selling these puts. So someone bought the SEP puts. That's probably what cranked this up a lot. And then let's see what the other trades were. Just if you go under time and sales and Thinkorswim, it's going to give you the top 2 trades volume-wise. Now, if you were to narrow your filter for Thinkorswim, these are all in Sep 20. If you wanted to look at stuff that wasn't in September 20 or wanted to pick a different series like everything else, then you can go down here, click everything else under a series, and then it's going to show you of everything else what were the biggest trades. Well, it looks like OX7 puts. Now, in my mind, I'm thinking, if you're a big player and you come in and you see already that SEP is trading the same as October, why wouldn't you just buy October for a couple pennies more? But for some reason, people don't think that way, and SEP gets cranked. They've got to take October up because, remember, the calendar spreads can't become inverted because that just doesn't make sense. So they take October up, but they just take it up barely enough so these aren't inverted. And I really think there's an opportunity on these if we buy them cheap enough. Now, it's not always going to come in. A lot of times you're just going to lose your 5 cents times whatever spreads. But there's going to become a day when this does work. And so let's track these. Let's watch this one this week. And we'll watch, of course, the AIMT one. And we'll see what happens. Maybe we'll put a small position on and we'll see what happens. Now, the other thing I wanted to address with you is let's go back to the main thing about this channel, the short vol trade. A lot of people now, we've gotten this pullback, and, of course, you've got TheoTrade saying, is it really a rally, or are we going to sell back off because they're perma-bears? But we've got this rally that's going on, and the vol has come in, VIX currently 15, and so you're going to get a lot of people on not only the chats, but on the Facebook groups and all that are starting to advocate buying UVXY or TVIX here. And I don't always agree with everybody on the chats, but I think it's useful to have people around, even if I don't agree with them, because it gives you these signals. It gives you an idea of what other people are thinking about, which is important. But I guess I just want to comment on, well, okay, is it time to buy UVXY? And in my mind, it's never time to buy UVXY. I either am short it or I'm not in the trade. And the reason for that is now we are in contango. There's more edge there's more of a chance ever that, let me repeat that. There's more decay than ever right now. So yeah, it's in the world of odds, if UVXY was 40, it's a better time to sell it than when it's 27. However, that being like in the same month, but this thing can still definitely continue to go lower, and there's no time ever to like back up the truck and say now it's time to buy, in my humble opinion. Here's the chart. That is a half-year chart, and you can see the down move. If we close up a little bit, you can see we were in that descending triangle from the beginning of August, and we're at the lower bound here. But this thing can definitely go lower. I don't see this as a time to buy it. Maybe somebody else has a different opinion, but I think it's time to continue to maintain your shorts. And this will take out that all-time low of 23 sometime. We don't know exactly when, but probably soon. If we look at the term structure here, I'm going to go to VIX Central. And we look at the term structure, we've got 7% contango right now, okay? So let me move that over so it's straight. So 27 times 0.07 is almost $2 a month that this thing is decaying just based on contango. So that is a powerful force pulling this thing lower. So I don't think it's time to back up the truck and start buying volatility here. I certainly would be a little bit more careful about starting a short vol trade if you're not already in it. Maybe wait, once again, as is always my view, that wait for a pop to get in a short vol trade maybe. We are pursuing right now the bullseye strategy in the sample position here. Somebody asked me why don't you move farther out with the calls you're selling? They said, why don't you move farther out with the calls you're selling because the gamma is a greater factor on things than your theta with 1 week to go. And that I responded to by saying, look, our strategy here is we're selling a naked call and we're letting it ride, whether it rides up $100 or rides down $2 or whatever. We're letting it ride and we're going to keep rolling it out until it's a winner. So gamma doesn't really come into play in that kind of a trade. We're not hedging this with the underlying. We don't have points where we're going to like a stop loss point or something like that. We know that this option, when we talk about our risk, risk being the worst thing that can happen, when we talk about our risk, selling one call is the equivalent of being short 100 shares of UVXY. So we are committed to the fact that when we look at this from the worst point of view, which is, I think, the correct way to look at things when you're trading, when we look at this from the worst case scenario, we are effectively shorting 100 shares of stock for each naked call we sell in UVXY. And I know UVXY is not a stock. I'm using that as a shorthand for the ETP. But we're shorting 100 shares of it effectively by selling a naked call. And we are saying we want to be short 100 shares of this. And if the price goes higher, then we want to be, even more, we want to be short 100 shares of it. And we're not looking to cover no matter what. Because even if the end of the world comes, the day after the end of the world, volatility is going to come in. The end of the world comes, the earth explodes, but then the day after, vol's got to come in, right? Because what can be worse than that? So even in the case of the end of the world and this thing goes to 5,000, we're not looking to cover 100 shares. So gamma doesn't really matter because we're not going to be looking to say at some sort of point, oh, well, the delta, gamma is going to be gamma is going to change your delta over the course of where the underlying is. In this case, we are already stipulating that when these calls are in the money, they're worth 100 deltas to the short side. So we're already stipulating that these are worth 100 deltas short once they're in the money, and we're not worried about the curvature of our position because we're just naked short these and we're not looking to cover them in any way. So gamma doesn't really matter. We picked the closest week because that has the most decay. In essence, we're short 100 shares, but we're short 100 shares plus whatever the premium is on the option. And then each week, we're still short that 100 shares, but we're short it plus the additional premium that each week that we're adding on because we're selling that option that has premium in it. So, if UVXY is $30, if we're selling the at the money call for $32, then it's like we're shorting 100 shares plus $2 that's decaying each week. And then the next week, stock might still be, let's say stock started at $30, we sell a 30 call for $2. The premium decays in that call. We lose those $2. Then we sell the next call the next week. UVXY could still be 30, but we're collecting another $2 because we're selling that next week call for $2. That decays to nothing. Next week, same thing. Call's worth $2. We sell that $2 call. It goes down to 0. Now, UVXY cannot move at all. It can just stay at 30, but it's as if it's going from 32 to 30 each week because that amount of premium is decaying when we sell that naked call. So the whole point of this is to pick the option that decays the most because we want to capture that decay, and we're going to zero in on which option is the exact best one to sell for that week, and that's where you get the idea of a bullseye. We're going to point our dart at that one that's the best call to sell, and we're going to, boom, throw it, and we're going to sell that one. And like I said, if it goes against us, we just roll it out to the next week. Now, yes, you can pick some times. Somebody came on and said, well, what if you'd done that strategy in this particular week? And they went back to a week that would have been like the worst time in the last couple years to initiate that strategy. So let's say we go back 3 years in UVXY. and we pick this week, if we'd started it like October 1st of 2018, that would have been like the worst week to sell the at-the-money call, because it would have taken all the way from October last year to April this year, like 6 months before this call got back out of the money that we'd sold. But we would have been collecting a little bit of decay. Now, granted, when this thing spiked from 40 or from 35 to 70, you're rolling a deep call, so there's not that much premium in it. You're just maintaining your short, essentially. But any other time that so it would have taken you almost 6 months to break even in that case, which is a long time. But any other time that you sold these, it would have taken less time, and you would have in fact been in the money for a lot of time. So yeah, if you'd started this strategy exactly in October of 2018, it wouldn't have worked for a long time. However, if we look at the VIX in October of 18, it was down around 9. Okay, so probably if we were discussing this back then and saying, okay, we're going to start trying this strategy, VIX is 9, most people would have said, well, let's lay off on that strategy since the VIX is at the all-time low, and let's let it come off the all-time low before we start this strategy. And that would have been a good call to make, and one that I feel confident that I would have made at the time. But any other time, if we started our bullseye strategy, it would have been easier to deal with and more successful. If we look back, for example, to, if you'd started that strategy in January of this year, you would have made money every week until you got to this week in April. Then it would have been 1 or 2 weeks that you lost money, and then you would have made money every week again. Same with if you started in April of last year, like you would have made money every week, and then you get this spike, you have to roll it for a week or two, and then you're in the money again. So yeah, there are no sure things on Wall Street. There is nobody who can come on here and say, like my friends asked me, Dave, can I give you $1,000 and you can give me back $2,000 in a couple weeks? There is no strategy on Wall Street that is going to guarantee that you can do that all the time. This is a strategy which I find interesting, which has worked for several of my friends and been a steady money maker. But yeah, it's not always going to work. That's why I encourage you to learn everything you can about this and give it a shot. Maybe small, check it out, get comfortable, all that kind of fun stuff. I feel that if we are in the middle of a big spike, like the one behind my head here, if you're in the middle of a big spike, I think that it would be better use of your capital to maybe buy put spreads or something like that. But if we're just kind of in normal time and you just want something that's mechanical, that's going to make you a couple bucks week in and week out, the bullseye strategy is a good one, I believe. Anyway, so that's that for Short Vol Show weekend. VVIX now 94. There's been some people online talking about how the VVIX is not a great, useful piece of information, and I kind of tend to agree with that. Just because something has VIX in the name doesn't mean that people who trade the VIX have to be in love with it and to use it and say it's super important. I don't think like the VIX is like, just because I trade the VIX doesn't mean I'm like, oh, the VIX is so important. It has something to do with aspects of everyday life for everybody. Everybody should know about the VIX because it is so in our lives. It's like no. If you can find a way, and I've said this a lot. When I diss people that are technical analysts, people that analyze chart and figure out stuff, technical analysis people, I say, look, if you can find a way to make money in the stock market your own way, then God bless you. Who am I to say anything different? I tend to focus on certain things which I like to explore, and it's fun to explore them with you. It's fun being part of the VIX community. I encourage you to get on Twitter and follow some people. There's some people that just post to Twitter. Join the Facebook group. Check out the videos. And Thank you to those recent people I've had a couple new recent people who've had some action on Patreon, so thank you to you. For people that, come on Patreon for a couple months and then decide not to give anymore, I want to thank you for having given the past. I totally get it. Thank you for those of you who were Patreon supporters of me for a brief period of time maybe and then moved on to other things. I really appreciate you. You guys are great. It's amazing to me when people are supportive of the channel. And this is something that I take very seriously. I am ultra focused on the YouTube channel. I want to be a big channel more than to make money, more than anything else. I want to be a big YouTuber. I don't sell other stuff like products, financial products. I'm not trying to take your money away. I just want to teach you about stuff. I love when people come to me and say, I learned something or I made money. That's like the most rewarding thing to me when people say, either I learned something today or I made money. So, and, I do want to publish the fact to people, the realities of trading. It's not easy. Traders don't make money all the time. Even the best traders don't make money all the time. You got to be wrong. We're wrong a lot. You have to just develop a method of understanding when you're wrong and moving on. Being able to get out of when you're wrong, say, I messed up. This idea is not working. Let's move on. Cut my losses. Accept the fact that you have lost money and it's not coming back, and move on is a hard thing, but it's something we all need to learn how to do. All right, so have a great rest of your weekend. Today, Sunday. We only have to wait a few more hours before the futures reopen, and we can start getting ready for the Monday trading session. So I'll talk to you guys tomorrow. Thanks for watching.